Hello, guys. Welcome once again to Traders Delight. How have you been? And how's been your trading sessions? Hope you are having an amazing time. You're welcome once again to Traders Delight. I am so happy because of all the amazing results I've been hearing from you guys. You guys are making me so proud, and I'm so glad with all your trading results. If you're new, I recommend you subscribe to this channel, and also if you have any question from any video, write it in the comment, any comment, and I'll respond accordingly. And I want to appreciate all you guys for your feedback once again. For those who let me know that they are watching me by writing "I love trading" and the likes, I really appreciate you. Thank you very much. And today I'll be taking you through a continuation of our understanding indicator series. There's a playlist where you get to understand indicators, and like I used to say, the success of traders, especially the profitable ones, is mainly lying on two things. Number one is the understanding of the price chart, and then secondly, your understanding of indicators. I have seen a lot of people say things like just do naked chart analysis, which is very good. I don't have problem with that. I do that as well, naked chart analysis. However, I had indicator analysis to it as well. They are all technical analysis, and the reason for doing that is I try to recognize the fathers of trading who have gone ahead and recognize all their efforts. People like W. Williams, who gave us the alligator indicator, and you will agree with me that's a very powerful indicator. Give us the awesome oscillator, give us the market facilitator index. Is quite a number of indicators, and this I see these indicators as a summary of their years of experience summarized together. Before they invented the indicators, they put in a lot of thought, a lot of work, a lot of years, several years. Some got it after 30 years, 35 years of solid, consistent trading. So I want to believe that the just throwing away the indicators is just like ignoring that the fact that there is something you can learn from all the experience of these people. And the indicator we are looking at today is the average directional movement index, which was given to us by J. Wellis Wilder. And this is the same guy that gave us the popular relative strength index, that every chart, if you look at every chart, either forex, currency pair, or stock market, or the indices market, whatever volatility, the relative strength index is always useful. So you see people like that giving you something over the years, it's something worth it. So I like to add with the naked chart analysis and all the support and resistance and the price action thing. I try to add in indicators because that will give you a very solid knowledge and make you a better profitable trader. So today we'll be looking at the average directional index. Just ignore the moving average that's on my chart right now. I just added, it's just part of what I've been using before. So today we want to look at the average directional index. I'm going to go add it. Just ignore these indicators, just follow the one I want to add. So you come here. Okay, let me go back so you can know. You come here and you click here. So once you click here, it will take you to this place. Then you'll come to this place. All right, so adding it. So this is the indicator we're looking at today, the average directional movement index. Now, what is this? Okay, let me set it back to okay, default. Good. Now look at this now. This indicator is a very powerful indicator because why is it powerful? It's an indicator that really works to tell a trend. And you can see that it was under the trend section of indicators that I went to pick it up from. So with this indicator, you can tell the trend, but you need to have a sound understanding of it. Now, when Willis Wilder gave us his indicator, he recommended two things. Most of the time, if you're looking at maybe trading view or some other platform that has a trading chart, this indicator will come with two periods. One period for the style, which is the main average directional movement index. That's the main one. And the other period for the positive D1, DI, and the negative DI. Now, looking at this, what is the understanding behind it? Now, the understanding behind this is this: that period, the reason why on MetaTrader you are seeing it as just one is that it is using, this is the same 1414, so it just gave everything period 14 here, so everything is working on period 14. Now, the beauty about this is this: whenever this is your style, this is what you are going to use to identify if there is a trend or not. So what you do is this style, once you have it on the chart, then in the indicator, once this has a figure higher than 25, take it that current movement is a trend. Let me go back again. This line, I'm going to show you, I'm going to go back now. Once this line has a figure that is higher than 25, when it's higher than 25, any figure higher than 25 for this is an indication that there's a trend in the market. So I've heard people say, how do I get to identify, is there a trend in the market? This is an excellent indicator that can tell you that trend. If there's a trend in the market, it is, this line cannot give you immediately what kind of trend it is, but from your knowledge of trend and then from what I'm going to explain further, you will know the kind of trend it is. So this is showing that once it's above 25, there is a trend in the market. Is that not beautiful for you to know something can confirm to you that there is a trend in the market? So once this has a figure higher than 25, it's a trend in the market. If it's lower than 25, please avoid the market if you don't want to trade a range market. Most of the time, for a range market or market that is about to switch trend from one trend to another, the figure for this style is going to be less than 25. So with less than 25, you are very sure that there is no trend in the market. Now, what is this D plus DI and negative DI? Now, this, because there are two extra lines that you should watch out for. When you see them, their crossover can indicate a uptrend or a downtrend. Now, I like to do something, and that helps me to be able to clearly identify, because if you look at this now, you can say this is something bluish and something, this is green. This is somewhere close by to green, and it might be difficult to identify. So what I want to do is that I like to change this to something very vivid. Let's say blue, clear. So we know we are dealing with blue. And this one, I changed this thing to red. Now, why am I changing this to red? Let me make it something brighter, good. Is this: whenever this D, positive D, is crossing above this negative DI, you have an uptrend. Whenever this negative DI is crossing above this positive DI, you have a downtrend. Now, let's go to the chart, and I want to explain the uniqueness of bull and crash, and then you now begin to understand what to do. Now, before you leave here, I want to do one more thing, and that is the levels. So for the level, let me just pick a level. So the level here, I'll just add 25 because I want it to be a signal. So I just use this as black, so that once it crosses that, I know. So let's go with that. We are good. Let's go now to the chart. Good. Now looking at the chart, you will see something here that is very clear. This is a 5-minute time frame, and see what happened here. See what happened here. A movement like this it's like look at how it just fell from there. You can see the red crossing over the green upward and just fell. You can see this, it didn't touch. It didn't touch, and you see it didn't work here. But here, there was a cross here of the green above the red, and see, it just fell from there, and that's it. You can see how big the trend was, and that is an indication. And you can see that the blue was well above 25, which to tell you is a trend is there. If it crossed down below 25, then that means that the market is indecisive. But once it becomes above 25, which is here, the figure here is 28.6, and that shows that there was a trend. You can see a downtrend came. So you see, it's an indication. If you really use this, you're going to be getting a lot of amazing results. However, now let's see this. Look at here. There was a clear something here. It shows as a trend, and that's a continuation. You can see a continuation till here before the market now changed. And this is a 5 minutes time frame. Whatever you have picked from here, look and see from here to here, you have like almost 60 to 70 pips or 60 something pips, and then you are out of the market. So it's a very amazing indicator you can use. However, I want to bring about something to you, which is the uniqueness of boom and crash. Now, what's the uniqueness of boom and crash? The uniqueness of boom and crash is this. Because boom and crash is a kind of commodity indices that the spikes most times are not close together unless you have them come all the time. Like for example, let me explain what I mean. You can see here, if you read here, it says boom 1000 index M5. That's 5 minutes time frame. So on average, one spike occurs in the price series every 1000 ticks. So which this is an indication that on an average, after a spike occurs, before you see another spike, it will take like 1000 ticks. And that one makes it impossible to be able to properly get the beauty of this ADX in the market. However, with the way it is now, you can see here, it's a very solid crossover of the red upward, and you can see what happened. See the trend. Here it happened again. See the trend. So you see, here it happened. Here you can see it looks as if it crossed here. It happened. You can see here it didn't cross. It didn't cross here. So you can see it keeps going upward, and the reason why it's now we need to be able to know. Right now we can't see where the green is crossing above the red. Why? Because for boom, most of the candles are downward, are selling bearish candles. So the distance between the spikes are much, so it's not able to really form the information here. So how then do you get the best from this? How then do you understand and be able to use this properly? So for boom and crash, the higher the time frame, the better the work of the ADX for you. Unless you just want to stick with trading the tick. And by tick, I mean the tick for boom is what? To sell. That's bearish. That's the tick for boom. For crash, the tick for crash is what? Buy. So you are just going to be waiting for when this crosses and then this goes up, and then you just pick only the downtrend for boom, and then for the crash, you'll be picking the uptrend. So if we go to higher time frame, look at for 15, you can see that the green is coming up higher. You can see here that when the green cross above the red, you can see this movement upward. You're able to pick it. See here, where the green cross above the red, you can see this movement. You're able to pick it. However, to be able to pick this properly, you need to have to go higher time frame. Now, if you go to 30, you will see that the green will come even much higher, and you can see the green green, you can see the evidence. It's an evident green crossing above the red here. Green crossing above the red. However, here it's a dangerous thing. Why? Because it's showing less than 25 figures, which are going to wait until it comes here and crosses above 25 before you now go into the market and then join this uptrend. So you can see here the green crossing above the red, and then you are seeing the uptrend go. So however, if you are not that sure, you can just stick with trading the downtrend for this. I don't want this video to be too long. All right, guys, let me know what's your feedback on this indicator. Any question you have, write in the comment section, and then let me know what you understand so much about it. And the reason why I'm doing this is because very soon we're going to be having once we have solid understanding of all the indicators, I'll be teaching you how I come up with amazing strategies, all the amazing strategy, the eagle strategy, ultimate strategy that you guys have been using, have been getting amazing results from. Is from basic, wonderful understanding of it. All right, guys, take care. Bye.